This is a New New Zealand dollar. So even a little baby can tell that this market is currently in an upward movement. So here is what I did. I can't just come into the market and start buying because it's basically in an upward market. I have to draw a trend line. I have to draw a trend line. A trend line goes like this. I don't know how you draw yours, but this is how I basically place my trend line to get as many touches as I wanted. As you can see. So this is how I traded this market. Immediately the market comes to my trend line, I take a buy position depending on the candlestick confirmation I got. Well, I must surely wait for some candlestick confirmation before I jump in a buy trade here in this upward movement. So getting to a point where I saw a double rejection that gives me a confirmation that this particular market is about to change trend at this particular place here. When I saw this double top, when I spotted a double top like this, I know that this market is about to change direction. So uh, I had to wait for my trend line to break because I understand that this particular place here that the bulls are losing momentum and the bears are coming into this market. For me, I took this trade somewhere here, somewhere after this break of neckline, because I waited for the neckline to break before I took the trade. Immediately I saw this bearish candlestick, this bearish confirmation, this particular bearish confirmation. I had to take a short position from that zone because I've already confirmed that this market is about to change in trend, so I'm no longer going to respect this trend line. In some cases, I don't basically advise people to take short position immediately after the neckline. I advise people to take short position immediately after neckline and pullback. After the pullback, I took a short position somewhere here because I normally target double of my risk. For example, I risk 1% to get 2%, or basically I risk 1% to get 3%. That is how I normally trade to avoid much losses in case if the market doesn't go my direction, because market does not always respect our analysis. So you must use a little stop loss and make sure your stop loss is okay compared to your winning. For example, you can do it 2 to 1, or I mean 1 to 2 reward ratio, or 1 to 3, just as I'm doing here. And I understand that this particular market almost took me out this week in terms of the pullback. In terms of the pullback, because my stop loss was somewhere here, and immediately market started playing with my emotions just as it did here by coming down from my entry point to this particular place and retracing back to the neckline, which is the neckline pullback I told you earlier that I normally advise people to take a short position immediately after the pullback, or in the pullback you can take a short position here. Then immediately this week would have taken me out of this market, but I wish it did. I would have just jumped into the market again after this bullish candlestick here. I would have jumped into this market again. One advice I should give you guys is that if you are certain about your analysis, if you are really certain, just like as this particular place, if this market took me out, as I said, I would have jumped into this particular place because I know that it's just a pullback. Then the pullback this thing week took me out of the market. Then immediately I saw the close of this bullish candle closing here. I have to jump back in the market, put my stop loss somewhere here again, jump back in the market here and put my stop loss exactly this level, then target somewhere here again. As I said, I do on 2 to 1, or 1 to 2 or 1 to 3. This is exactly what I would have traded, but I'm lucky it didn't take me out, so I had to draw a trend line from this particular place here, from the double top down like this. Then this market started playing out again. Then the pullback. This is the lower high. Then coming back down again to form a lower low. Then moving back up, respecting the trend line again to form a lower high. Then I have to take another short position somewhere here. I took another short position here. Took a short position here because this candlestick respected the trend line. It respected this trend line here. So I have to take a short position again. Took a short position here. Then targeting double of my risk again. My stop loss was somewhere here. Exactly what I traded. Then the market plays out and hits my TP again. Then coming back to this particular place, I understand that this market have already came into this zone some time ago and respected this particular zone that it is. You can check it in 4 hours time frame. This particular place. Let's go back to 4 hours time frame and check. This market respected this particular place earlier. So I know that this market might not be able to break this zone, to break this particular place, this zone. I know that this market might fail to break this zone. So luckily, it plays out exactly as I wanted. By coming back to that zone, let's go back to 1 hour. By tapping in that same zone, it came into the zone again, right here. It came in the zone here. Started retracing upward, then coming to my neckline, to my trend line again, and broke my trend line. This market broke my trend line, guys. So all I had to do was to wait for a good some candlestick close above this neckline. I'm not just going to place a trade because of this particular candlestick here. I'm not just going to place a trade because of this particular one here. I have to wait for a good closure. So candlestick that closes above the trend line, just like this one, as this one did. This one did. So I have to take a long position. A long position here. Putting my stop loss somewhere here beneath the trend line. Then targeting 1 to 3. Targeting 1 to 3. Or 1 to 2. Whatever you like. Targeting 1 to 3. And this market plays out exactly as I wanted it to go. Now let me show you guys something. In case if you are seeing a trend going like this, something like this, this particular thing I just drew here, you would be able to spot a trend line here. Somewhere here. Then all you need is to wait for the breakout, or at least wait for your market to tap in the trend line you drew before taking a buy position. But immediately you see a breakout like this, be ready to take a short position, mostly when a good confirmation like this particular one, this is a good confirmation that the bulls are losing momentum, because this is a higher high that from previously, and this higher this is an higher low, where this is another higher high that is trying to form but could not break the previous higher high, could not break it upward like this, and it stops somewhere here, which means the bulls are losing momentum and the bears are coming in this market. So you have to wait and take a short position. And even when you see some let's say double top like this, you know that the bulls are losing momentum, then the bears are coming in the market. As long as the market is currently in an uptrend or downtrend, there must be a sign that the bulls or bears are losing momentum in the market before you then after that sign that the bulls or bears are losing momentum, you have to wait for break of trend line the break of trend line before placing any sell or buy order here. So thanks for watching, and do me a favor to subscribe on this YouTube channel to help me grow the more. Thank you all. remember to subscribe and like this video, comment if you wish to. Most important, please subscribe.